Most Americans don't realize this, but there are people out there legally paying thousands, sometimes even tens of thousands, less in taxes every single year, not because they're cheating the system, but because they understand how it actually works. The truth is, the U.S. tax code isn't just a set of rules, it's a playbook. And if you know how to use tools like LLCs and strategic write-offs the right way, you can dramatically reduce what you owe to the IRS while staying 100% compliant. So the real question isn't whether it's possible to pay less taxes. It's whether you know the strategies that make it happen. At the center of this is something called an LLC, or limited liability company, which is one of the most powerful structures for anyone making money outside of a traditional W-2 job. When you earn income as an individual, especially through a job, you're taxed first and spend what's left. But when you operate through an LLC, the game changes. Now you earn, spend on legitimate business expenses, and then pay taxes on what remains. That shift alone is where most of the tax-saving opportunity comes from, because the IRS allows businesses to deduct ordinary and necessary expenses used to generate income. Imagine this for a second. You're running a small online business, maybe freelancing, creating content, or even managing Airbnb properties. The laptop you use, your internet bill, part of your rent if you have a home office, software subscriptions, marketing costs, even certain travel expenses. All of these can potentially be written off if they directly support your business. What used to be personal expenses now become tax deductible, meaning your taxable income drops, and so does the amount you owe. But here's where it gets even more interesting. Many people don't realize that an LLC also gives you flexibility in how you're taxed. By default, it's treated as a pass-through entity, meaning profits flow directly to your personal tax return. But depending on your income level, you can elect to be taxed as an S-corporation, which can significantly reduce self-employment taxes. Instead of paying full self-employment tax on all your profits, you can split your income into a reasonable salary and distributions, and those distributions are not subject to the same payroll taxes. This is one of the most commonly used strategies among higher-earning entrepreneurs in the U.S. Now, this doesn't mean you can just write off anything you want. The IRS is very clear about what qualifies as a legitimate expense, and everything needs to be properly documented. That means keeping receipts, tracking expenses, and making sure there's a clear business purpose behind every deduction. This is where many beginners make mistakes, either by being too aggressive or not organized enough, which can lead to audits or penalties. The goal here isn't to push the limits recklessly, it's to operate smartly within the rules. Another powerful concept to understand is depreciation. If you purchase assets for your business, like equipment, furniture, or even certain vehicles, you don't always have to deduct the cost over many years. In some cases, through methods like bonus depreciation or Section 179, you can deduct a large portion, or even the full cost in the same year. This can create massive reductions in taxable income, especially for growing businesses reinvesting into their operations. And then there's retirement strategy, which a lot of people overlook. When you're self-employed or running an LLC, you gain access to options beyond a standard 401k. You can contribute to a solo 401k or SEP IRA, allowing you to put away significantly more money while reducing your taxable income at the same time. It's one of the few strategies where you're not just saving on taxes, you're also building long-term wealth. Of course, none of this works if you treat your business casually. The biggest advantage of using an LLC and tax strategies comes from consistency, proper structure, and thinking like a business owner. That means separating personal and business finances, maintaining clean records, and understanding how each decision impacts your taxes throughout the year, not just when filing season comes around. At the end of the day, the U.S. tax system isn't designed to punish people who understand it. It actually rewards those who create value and operate strategically. LLCs and write-offs aren't loopholes in the way people think. They're built into the system to encourage entrepreneurship and economic growth. So instead of fearing taxes or overpaying year after year, the smarter move is to learn the rules, apply them correctly, and put yourself in a position where you keep more of what you earn. Because in the world of finance, it's not just about how much money you make, it's about how much you get to keep.